Supposing you've got somebody who has got a small amount of salary, £10,000 let's say, and a huge dividend, £200,000, let's say, just for argument's sake. Now, intuitively, you'd think, oh, right, he's got £210,000 of income, therefore he is clearly paying tax at the highest rate you can. As most of his income is dividends, he will be at the 42.5% rate on his dividends. That's your sort of calculation, isn't it? Sort of mentally, that's what you'd think. Supposing that person gets another £10,000 of salary or bonus. His company pays him a bonus of 10 grand. How does that work? He's got another £10,000. He's already through all the higher rate thresholds. So you might think, well, he'll just pay tax at 50% on it. He's clearly a 50% taxpayer. So surely that non-dividend income will just attract tax at 50%. Well, does it? No, it doesn't, because it goes in at the bottom. And what it does, it pushes more of the dividend into the 42.5% band. So the effective rate of tax on that 10,000 isn't 50%, it's 52.5%, because he pays 20% basic rate income tax actually on the income, but then he pays another 32.5% on his dividend income. It pushes more into the high rate. So it's a most peculiar situation. It is not 50%. The headline figure is 50%, but it could be 60 if you take pension, personal allowance abatement into account, but even on dividends it can be some crazy amount if you get the mix wrong. So what is the point I'm making here? Rather laboriously, income tax is high. Income tax is very, very high at the moment. When I was on holiday, I read a book, as people do on holiday, because we have been told that this increase to the higher rate of tax to 50% is only a temporary measure. Only a temporary measure. I don't remember this person about whom I was reading saying that it was only a temporary measure, but he did indeed say it. Who was he? He was Sir Robert Peel. What did Sir Robert Peel do in 1848, I think it was, 1850? He reintroduced income tax. 1797. Well, that was the Pitt era, then it was abolished. It was abolished, wasn't it? When they paid for the Napoleonic Wars, income tax was then abolished.
Came back to the Crimea.
But they reintroduced it in about 48, 50, I think it was.
Yeah, by for colonial war again.
Yes, pay for another item of expenditure. That was a temporary measure. How much was income tax when he reintroduced it? 6p in the pound. 6 old pence in the pound, I hasten to add. 2.5p. 2.5p. But it was a temporary measure. Obviously, we'll see, won't we? Anyway, moving on. Capital gains tax. Here are the changes. We were all very worried that capital gains tax, something dastardly was going to happen to capital gains tax. In the end, did something dastardly happen? Well, I don't know. Make your own mind up. I will give you a few examples to help you in that direction. But capital gains tax, the one thing that I find very difficult is that what we have is a tax which is a tax year orientated tax. Capital gains tax is levied in accordance with the tax year in which you make the gain. But for the 2010-2011 tax year, we have got a game of two halves, if you like. You've got to decide which part of the year the gain falls into. Because prior to the 23rd of June, in other words, from the 6th of April 2010 to the 22nd of June 2010 inclusive, you are under the old regime. And what was the old regime? The old regime was capital gains tax was levied at a flat rate of 18%. That was it. End of story. It didn't matter what sort of asset you had. Well, it sort of did, because there was entrepreneur relief. It was available then as well. So we'll come back to entrepreneur relief. But basically it was 18%. What we now have is if you have gains that are made on or after the 23rd of June 2010, and that date is quite interesting, I put to you, because we had become used to budget changes taking effect on midnight just gone. So you didn't have a period of 8 or 10 hours to rush out and try to railroad through a transaction to take advantage of the existing rule. But here we did have that. And I was indeed on the phone on the 22nd of June to 2 clients saying they've changed the law in a way I didn't think they would, because I didn't think they would do it mid-year. I thought they'd either do it from the 6th of April 2010, unlikely, or the 6th of April 2011, more likely. That was my view. Doing it halfway through the tax year, I didn't think they would do. I was wrong. But so we have the situation now from the 23rd of June, including the 23rd of June, you have sort of three rates. You have what you might loosely call a basic rate of capital gains tax, which is 18%. Who pays the basic rate of capital gains tax? The people who pay the basic rate of capital gains tax are people who would pay basic rate income tax on the gain if the gain was added to their income. Do not delude yourselves into thinking, oh, my income is only £40,000, so I'm just a basic rate taxpayer. I haven't strayed into the higher rate tax. So on my £1 million gain, I'm a basic rater, it's only 18%. No, it does not work like that. That £1 million gain would be sort of notionally added on as income, and to the extent that it would go into the higher rates of tax, i.e. all of it would, you will then pay tax at the higher rate of capital gains tax, 28%. There is only one higher rate of capital gains tax, 28%. There are 2 higher rates of income tax, doesn't matter. So you have a sort of basic rate, higher rate. You then have entrepreneur relief. Entrepreneur relief was the relief that Darling was pushed into in 2008. If you remember, up to the 5th of April 2008, what did we have? We had taper relief. And what was taper relief? Taper relief recognised the length of ownership of an asset, which and reduced the taxable gain accordingly. It depended on what sort of asset you had. You had business assets and non-business assets. Business assets were dealt with more benignly than non-business assets, but broadly speaking, the principle was the same. Different periods, different rules, but the broad thrust of it was the same. The longer you own it, up to a cut-off point, broadly speaking 10 years, the less tax you paid. That's what we had. Darling said, far too complicated, simplify, let's get rid of all that, let's get rid of all sorts of things and just have a very nice, easy capital gains tax regime, 18% for everybody. And what did everybody who would have got the 10% rate of tax under taper relief say? We don't like this much, we want our 10% rate back. We need some kind of measure of relief. So entrepreneur relief was sort of hatched on the hoof by Darling when he was backed into a corner in 2008. In Darling's budget of 2010, as I mentioned earlier, he upped the limit for entrepreneur relief. He announced that instead of it being the first £1 million of gain that qualified for this thing called entrepreneur relief, he upped it to £2 million. So you have a rather interesting situation that from the 6th of April 2008 through to the 5th of April 2010, the amount of gains qualifying for this thing called entrepreneur relief was £1 million. Then, from the 6th of April 2010 up to the 22nd of June 2010, the amount qualifying, £2 million. Then, lo and behold, from the 23rd of June 2010, the amount qualifying, £5 million. So we now have £5 million threshold for entrepreneur relief.